Good afternoon, everybody. Now I will let you know the commodity outlook for agri commodities, what has happened in the last week, as well as what would be the outlook in the coming week. In the last week, we had seen that all the agri commodities reversed the gains of the previous week and ended in the red. Overall, the demand continued to be lackluster, which exerted a downside pressure on the commodity space. Chana posted maximum losses of around 2.9%, while cardamom posted minimum losses of 0.2%. Jeera was the only commodity which bucked the trend and ended in the positive terrain, posting around 1.5%. The rise in the acreage under Kharif pulses has exerted a downside pressure on the chana prices. Acreage under the Kharif pulses rose to 25.95 lakh hectares as compared to 13.04 lakh hectares as of July 12th, which exerted a downside pressure on the chana prices. Entire spices complex also travelled in the negative zone. The demand continued to be lackluster, which exerted a downside pressure on the spices. The export demand from the overseas buyers pushed jeera prices higher, which resulted the jeera prices to trade in the positive terrain. However, the sufficient stocks of cardamom exerted a downside pressure on the cardamom prices. Apart from that, turmeric and dhania also remained in the negative terrain as the arrivals remained sufficient to cater the demand. Entire oilseed complex traded in the negative zone as the acreage under the Kharif oilseed also witnessed a rise. Acreage under the Kharif oilseed jumped to 135.9 lakh hectares as of July 12th, a rise of 10% year on year. Less than expected demand of the soya meal as well as the refined soya oil pushed the refined soya oil and the RNC prices lower. Apart from these commodities, sugar also ended in the negative zone as the sufficient supplies of the sweetener pushed the prices lower in the last week. Acreage under the Kharif crops jumped to 517.65 lakh hectares as on July 12th as compared to 341.49 lakh hectares in the same period previous year. The acreage under the Kharif crop has witnessed a sharp rise due to the sufficient monsoon in the season. In the coming week, we expect the pulses prices to remain in the negative zone as the demand continues to be lackluster. But the only factor which would push prices upwards would be the demand from the local stockists, as continuously the prices are trading near the MSP, that is 3000. In the spices segment, the rise in the demand from the exporters is expected to keep the prices of the jeera supported, while sufficient stocks of turmeric as well as cardamom would pressurize the prices of the spice. Under the oilseeds, all the oilseeds would remain under pressure as the demand continues to be lackluster. Apart from that, demand for the oil as well as meal remains to be dull, which would exert a downside pressure on the prices. Now for the strategies. Soybean prices are expected to trade in the range of 2900 to 3295. Therefore, we recommend a sell at around 3150, keeping a stop loss of 3230 and for a target of 3030. RMC prices would trade in the range of 3400 to 3580. 3400 continues to be a stiff support for the prices. Similarly, chana would trade in the range of 2791 and on the higher side 3150 would act as a strong resistance. Jeera prices would trade in the range of 13280 to 14500. Therefore, we recommend a buy at around 13680, keeping a stop loss of 13275 and with a target of 14300. Turmeric prices would trade in the range of 5500 to 5950. We recommend a sell at around 5810, keeping a stop loss of 5941 for a target of 5580. Dhania would trade in the range of 5800 to 6500. We recommend a buy at around 5950, keeping a stop loss of 5830 and targeting it around 6350. Thank you.